And then when the COVID was coming out, we realized that we're going to hit inflation. And inflation, you need to buy assets that has pricing power. And pricing power means you can change the price whatever that you sell to and as fast as you can to match with the market. The multifamily came to that sector where we have pricing power every 12 months. All of a sudden, I said, okay, multifamily is there. And at that point in time, we wanted to grow. So multifamily is the largest segment of the commercial and also has the best pricing power. To put together, we decided to push the multifamily, and we saw how the other people grew. The syndication was way to go, and that's how I came into syndication 2 years ago.
Tim is one of the most authentic and genuine people I've ever met.
I sincerely believe he's coming from a position of giving, and that means a lot.
You're going to make huge progress.
Welcome, everyone, to today's Capital Raising Show. I'm your host, Tim Mai, and today I have a super special guest on the line with us. He's more special than normal because him and I go a bit far back, even before I went into this syndication space. And both Shahriar Khan and I do quite a bit of land deals and wholesaling land and buy and hold them and all of that stuff that has to do with land. Shahriar got into this syndication space about a year, I think, before I did. And so I get to watch like how he went from zero to now, gosh, who knows, over $175 million asset under management in just 2.5 years. I get to watch a lot, and I get to see how him and the massive capital team, built the business together as a team, as partners. And I learned a ton from this gentleman, both directly when I talked to him, as well as indirectly, just looking at the way that he runs massive capital. And so super excited to have him on today. Massive Capital now has been actively acquiring assets in land, in single family home, and commercial multifamily. Recently partnered up with a development company that do retail shopping centers as well. So they're very diverse when it comes to the amount of assets. In terms of the multifamily side, they have co-sponsor on 262 units. That was just in Q1 of 2002. That's how you guys got started, right? Q1 2022, when they first started, they acquired 3 properties, 262 units. Shahriar has a pretty impressive background. He's been in the Fortune 10 companies and the leadership role for 13 plus years, doing a lot of finance, CFO type of stuff. And he has an MBA from Jones School of Business, Rice University, undergraduate in electrical engineering at A&M University here. And so with that, guys, let's give Shahriar a big welcome. Woo-hoo! Zoom needs to do like an actual audio woo-hoo button for us. Well, welcome, Shahriar. Share with us. Let's definitely share with us. What got you into the syndication space, especially?
My wife's fault. That's how I'm going to start with it. Let me go back a couple of years, right? So me and my wife both. So for everybody who's married and all the men out there, I married up at least 2-3 layers up, right? So on that note, she worked at Exxon, I worked at Shell, and after our second kid, she decided to come home. And then, we started to look at something different, right? And at Rice, I thought I would be a business consultant. So by that time, I did 2 startups with one, just a nice failure per se. And the second one was okay. And the third one, I decided to come into real estate because the risk control makes sense. Coming out from the Shell, to me, it's all about the risk, right? Whoever can manage the risk will be a better place to, will potentially be at a better spot. So I came into real estate about 4 years ago on the risk side. And as I came in, as I came into the single family, quickly realized it's not my play. Then I went to land. That's mostly because it's a liquid asset and lending wasn't available back then. That creates an arbitrage. So the point is, finance perspective, we are mitigating risk and we're looking for arbitrage. So back into multifamily, when we underwrite it, we look for margin first, then the buy price and the sell price, right? Going back on the syndication, just like everybody else, we have walked the path, and we came in single family space and work into the portfolio of single families and portfolio of lands. Uh, Last 5 years, I bought over 250 properties, mostly in Houston area, me and two of my friends, without raising. What we quickly realized is that for you to grow, you need to get into the commercial segment. And that's why you need a team. And when the COVID happened, I mean, for us, 2019, we're in a recession. At least that was a statistical recession. So we could stop buying anything large because we didn't know how the market's going to play out. So when 2020 happened, 2019, the whole COVID happened, we went to the industrial sector. All triple net assets, stabilized cash flow, no risk. We all also were engineers, so we kind of sort of knew how to underwrite the tenant base and the business model. And then when the COVID was coming out, we realized that we're going to hit inflation. And inflation, you need to buy assets that has pricing power. And pricing power means you can change the price whatever that you sell to and as fast as you can to match with the market. The multifamily came to that sector where we have pricing power every 12 months. All of a sudden, I said, okay, multifamily is there. And at that point in time, we wanted to grow. So multifamily is the largest segment of the commercial and also has the best pricing power to put together. We decided to push the multifamily, and we saw how the other people grew. The syndication was way to go. And that's how I came into syndication 2 years ago.
That's amazing. Because I think your journey is very important for others to learn, especially if they're starting out. Because it's just so I want to dive a little deeper into your journey because I mean you guys have such an impressive growth. So when you first started was into the syndication, did you immediately took on a partner? And is it one partner? Is it two partners? Like at what point did the partnership started, or did you start it out yourself? And then also too, your very first deal, was it an LP? Was it GP? Both? Share with us about that.
There's a joke at Shell that you build billion-dollar companies on PowerPoint. I believe that, and that is true. So we got into before we got into whole syndication process, we wanted to study the market. We wanted to see the people how we fail, how we win, and take a best practice and execute that prior to getting into a deal. So the one of the biggest thing that we have done, we said, hey, early on, at least in our mind, it's that we want to build a $500 million company. Thus, we need board of advisors. Advisors got to have a $500 million worth of portfolio for at least 10 plus years. The net worth has to be a certain amount, and they have to own more than 3,000 doors for us to call them advisor. So we reached out to that. It was odd when we go to the conferences and say, hey, is your net worth more than 70 million, 100 million? Hey, do you own more than 3,000 units? Hey, is your portfolio more than $500 million, right? But we found out 4 friends, and they gave us a lot of confidence on what the growth path was for them. So we took it on a piece of paper and we said, look, we need to have a team that has been there, done that in terms of running a company that has $500 million portfolio. So we built the team first. And then we took the team through the test. And then we decided to settle on it. So for us, when we got the first indication, team was in place. And that the way we reached out to the team was everybody has done well in their professional life and or within the real estate. And everybody was looking for someone with a complementary skill set. And all of us came from recommendations. So all of us were introduced by somebody else. So when the team came together first time, when we made an offer, we had that faith that that person is good enough, that ran a big enough portfolio. So and right now we're trying to come together, right? And that philosophy has been true up until now. 100% of our massive team, where we work, everybody, we have been reverse recruited. And so we like that. We went up, tap the shoulder, hey, would you like to work with us? And then we kind of built the team. So long way of saying team first, deal later. That still holds true if most of our deal falls through because the team structure doesn't add up before we even get to the deal. So that was that.
Okay.
And back to the first deal that we have done, that was a blend of GP and LP. It was 4 partners, me, Ajit, Sanjay, and Mike. We were the 4 largest LP of the deal. We raised about 6.3 million on the first deal. So the first deal, we made an offer, us as a team was $19 million. And I was the underdog. I still am in the team. I mean, that's a story alone, but first offer that we made as a team was $19 million. It didn't work out, but we took the same structure, found the deal for $16 million, and we bought that as a first goal.
That's amazing. And how did you guys met?
That's a story. So
On Tinder,
one of the
obviously, but yes.
yeah, Tinder, Facebook, whatever, left, right, sweeper, So we send the floaters out that hey, we're looking for some really strong partners who will bring the expertise. Because in my mind, once you run a $500 million company, learning is very zero nil. It's all about repetition, right? So when I looked at it, yes, I come from oil and gas. Yes, we have run a billion plus portfolio, and we have the finance structure, but I'm not a subject matter expert in the multifamily. So we
Mm,
needed somebody in the multifamily domain who has been there, done that. That means you flipped 4 or 5 assets, $50 billion size, and across the Texas market, right? So we knew. Uh, I heard of one person, Sanjay Agarwal, from a big dog organization. I saw his work, and he's one of his common friend Ajit. He was one of our partners, and he's my partner. So when I was talking to him, he was like, "I know that guy," but he
mm.
was, he was working for somebody else. And then he took a year off when he wanted to come by. Both of us were like, we want him. He's really good. Let's get him in. So that was one. And then Ajit was there and he wants to do operations. And I'm here on the deal finding and understanding the strategy. Then we heard of Mike that, hey, there's a guy from the oil and gas from ConocoPhillips. He's retiring. He's kicking butt and taking names. He's closing like 500 units altogether all of a sudden, right? We were like, okay, let's go meet up, that gentleman. So here he comes. And here comes the deal, the $19 million. Now I live in Katy. The deal was in LaPorte. 9 o'clock is the meeting. I show up late, 9:15, 9:20. Sanjay shows up from Dallas at 8:30. And Mike shows up with his nice cool shoes. I was like, huh, you know what? The team is kind of cool. So that's how we met. So we all were introduced by somebody where they saw them in action and they had good high regards for them. And that's how we came together.
That is so interesting. Yeah, I know it's I, I I understand like this business. It's very sort of intuitive to play together with others and to have partnerships. But it's one thing to partner on a deal. It's a whole different thing to go in and partner on a company, a brand that you guys all that you guys all work behind. And so it's always so interesting to learn. I know I had a bad partnership before, so I'm a bit gun shy when it comes to coming in as partners on in a company. But yeah, I mean, obviously, you guys really able to leverage each other's strengths and so your partnership went way beyond that first deal. So share with us, and not only that, but you guys brought on Jasmine pretty early on, right, in with your team, and did all the investor relations stuff, and then Trevor came on as well. Yeah, you guys just, I love how you created the team. So share with us, who plays what role in both the partnerships and also the extended team, within your organization.
Okay, I'll share a little bit more detailed on it, then I'll kind of narrow it down. Okay.
Okay.
Um, as we started, right, we saw how the economy was playing out, and some part we knew, some part we just didn't know, just like everybody else. But one thing we do knew is that when the downturn happens, right? I've been through 3 down cycles for oil and gas, and with a large size of asset, a portfolio through the downturn. So when the downturn happens, there are typically 3 things kind of plays out. And those 3 things, it's a must-have for everybody who wants to come out from the downside and accelerate on the upside. One is the balance sheet. You must have balance sheet. This is not the time you do skinny, scrape every single dollar or time to get a loan. You must have a meaningful balance sheet. And a meaningful balance sheet. Second thing, your liquidity. When market is bad, nobody's going to give you a loan. Folks who have the right balance sheet, they will barely get the loan. On top of that, if you have liquidity, then you get to accelerate. And then you build the team on a down cycle. So when the up cycle happens, you're standing on the front. So we had that
Mm.
early on. And when we started, we solved the balance sheet with our advisors. Remember those advisors that we brought in for a very tactical reason. We have some gaps, and they mitigated those gaps. They also brought in knowledge and a wisdom and a balance sheet. And the second one was the equity raising, right? One of the things we say at the Massive is, if we all do the same thing the same way, then we'll end up being at the same spot just like everybody else. What's the probability of winning, right? So when we saw that, we knew that we need to have a team. and I'll get sick. Sanjay will take vacation. Mike is going to go somewhere else. We need a right. So from that team, from that framework, we brought in our heavy focus was the equity raising team. So I was CEO slash CFO. Sanjay works as COO, and Mike works as CIO, the investment officer. All thing investment relations, an event goes to him. Strategy, and larger M&A and marketing comes from me. Sanjay looks at the operations and the asset management, and I kind of float around in between. Underneath us, Mike has the biggest team. I'm jealous. He has the investor relations team, and everybody that we came in on the investor relations team, we brought in from DE&I perspective. So we have a blended team and we have a blended experience, but given all things equal, everybody's a superstar. So Jasmine started with Mike very early on, and one of the best thing about Jasmine, there's something to be done. She's gonna roll up the sleeves and she's gonna knock it out, right? And she's not in a sense of, hey, what's on the other side, but she aligned on the vision. She was there, and we saw her coming in. And when we're growing, like, hey, best thing is you go to the folks who you think highly of, right? That's where Jasmine came in 2 years ago. Now she's a rock star, if you ask me. And the same thing with Maria. We met, and Maria was one of those, like, we're kind of figuring out which way we do it, and we had to do some turns. And she comes from a very technical and medical professional. Went to Purdue. Then when we met her, we really loved her. Right? She likes us too. At the same time, the love is different, right? Over time, and we're still loving each other. Well, let's go come together. So that's how Maria came in. Now look at her. I mean, she can, if you ask me, she can do dances around and the whole system as you go. Last 2 years, 14 deals on the tech side, on the investor relations side. She's the one right there. Oh, 1 year, my bad. And then we have only know Trevor, right? We knew that everybody knows Trevor, and Trevor wants to do it. And the coolest thing is if you can hang out. So we talked to Trevor. He gave us a little bit more faith, so that out, and it really worked out for us. And things that Trevor can do, I can replicate, and none of us. And that's why we look at a little bit more long-term view. We look at the values and the style and how we are different. When we plug it in, you have a team, and that's how we kind of went about and recruited all of us. And then we have Brenda, right? She's awesome too, and she's up and coming superstar. Just watch. So.
That's yeah. I mean, I work with you guys closely, so I get to know a lot of your teams, and yeah, they all definitely are superstars, and I love your ability to attract talents, and and bringing them to the team. So let's go into that. If you can share that, what would you say is what attracted your teams to you guys? Is it because of your vision of where you're going? Is it because of the way that you structure the teamwork? Is it like, what is it about it? Because I mean, you don't see a lot of big teams like yours that all come together, without salary compensation in a lot of cases, right? But you're able to attract talents, and still run a very lean team. So share with us some insights into how you find them, what get them attracted to massive capital. Yeah,
I would say first is, I think if I step back and if I look at the whole thing and what's underneath, which is my silver lining, right? So to me, I would say the silver lining is deal making. Massive capital has been the team. We're deal makers. We have made deals last 2 years. Almost all of them are good deals. If me, but we made deals. We know how to put the deals together, and that was the biggest firepower that we have, right? Because as you know, we do land development, we do retail, we do industrial, and we do multifamily. So the point is, we have a lot of skill in the skill set that is technically there. We have some additional, we have some leverage to play, so we can do deals. And deal making is the biggest thing that we have within our team that works, because almost 80-90% of the partnership falls out, especially on the multifamily side. You don't do deals, there is no fees and out, right? And it hurts. Multifamily is tough, right? First 3-4 years you don't make anything, but underneath that is the deal making part of it. So Sanjay and I and Mike, when we came together, biggest requirement is that you must be successful in the real estate. That means you have done hundreds of deals, you have 50 plus houses, you have done hundreds of apartments, otherwise you are not big enough, right? So the deal making underneath of everything, that was there. Now, on top of that is the vision. What we know is that for 3-4 years, it's going to be a grunt work. The profitability is very margin because we're breaking in. But once you make the first turn, you'll be in a very much good spot. And more, I mean, all of our team that we have right now, they saw the vision, they saw the deal making capability, and they saw how flexible, what the options that we have to go through the times that we have, right? So I think that's what I would say, the deal making and the vision that attracted, most of us, and almost all of us, we work 60 to 70 hours a week easy. When
Right.
a team works that way, you get that camaraderie and you get that, that hive mindset, and that attracted almost all of our team members.
That's amazing. Yeah, you guys are super impressive. Um, so your initial planning was you mentioned it was $500 million asset under management. Is that correct?
Yes.
Where is it now? I'm sure that was just the beginning. What is y'all's vision now?
So we are, at least on paper, we are designing it for $1 billion by end of 2025.
Wow. Okay. Yeah, that's real quick. That's two more years, and you have a little bit over $800 million to go. That's
Yes or no, right? Yes, from the massive side. If you do a linear path, we don't get there, right? We don't have enough balance
mm,
sheets, we don't have firepower to get there. They should break. What we have done, again, once you put on a piece of paper, I got 2 years to go. I want to hit the billion. I'm at a 200 million. I have 800 million to go. Where do I go? And organically, we cannot get there. Then what you do a bolt on, right? That was biggest driver for margin with the Realty One. They have $300 million already. So 3 plus 2, I'm already $500 million. And
gotcha.
that's $500 million clogs the gap. Now I have 2 more years to go. The massive of 200, Realty One does another 200. We are there.
Yeah.
So that's, unless you put the plan together, it's tough to see, right? So that was a very tactical reason for merging with Realty One, not only for the asset perspective, but also the skill set perspective, right? We believe we must have a leveraging factor, a differentiating factor, right? And they have a very acquired skill set that not everybody can get. It takes years to get there. And also we are building something that they don't have. And yeah, they can get to us, we can get to them. It's going to take 5, 6, 7, 10 years. But if we come together, we can get there tomorrow.
Right.
That's the whole idea.
I love that. I love that. Now it just hit me that your growth pattern and the way that you guys are scaling so quickly is you start out as partners, and then you build team, and now you even doing mergers and like just kind of grow exponentially through leveraging others that way. I think it takes a special kind of training or a special kind of mindset to think like that, because it's like I don't think that way, I can tell you that. And so like that's why when when I watch you guys and the way you build your team, it's like wow, that's so fascinating, your ability to do that. Did some of that kind of growth strategy comes from your corporate days with the Fortune 5, Fortune 10s type companies, or what's the mindset like that comes from?
100%. And I am who I am. 80% of me was built by Shell, right? As much as we don't like W2, but W2 are there for a reason. And I was blessed to work with some of the really, world-class leaders. Sinead, CFO of Shell. I worked with her for 4 years. I worked with McKinsey for the last 8 years when I was there at Shell. We have seen how to frame the strategy about it. So absolutely so. It helped for me. Same for Sanjay. He was Barclays now. He went Chicago Booth MBA, worked at Barclays, Capital One, finance operations. His framework is big. Same with Mike. Traveled in 52 countries, lived in more than 9 months, about 20 some odd countries. He gives you a culture and a framework. So we have that framework that comes into the play, and then we kind of sort of think about it. And from the buying perspective, again, we're deal makers. We do deal in 3 different layers all day long, at the personal level, at the project level, at the company level. And you just continue doing those deal making. Going to the point is that you gotta do deals. That's your license to stay in business. And
Right.
last but not the least, look, a growth, what good looks like is out there. You take 10 $1 billion assets, if not more, and if you look at their skill set, you'll know what that skill set is required to get there. So we copy all day long, right? And we follow GE model, we follow somebody else's growth model, and we play with it. And nothing is unknown. Somebody has walked the path. We're just trying to find a better way to walk the same path.
Right. That's good. I like that. All right, let's switch topic a little bit over to capital raising. I'm just like when you guys have a deal you're raising capital money for, does everyone switch to capital raising hats on the team and like, or how does that work?
So we raised the we have a couple of taglines, right? What we call it, we build teams in between deals. We raise money in between deals. So when the deal happens, we go. So, and with the velocity perspective, we built a habit of raising all the time. So our average is every month and a half we close something. So we're raising all the time. So our investor relations team, they raise continuously. They have one that right now we're raising 3 deals, and they have 2 more coming up in Q1 already that we're working on. So those guys, that team is fantastic. So they're raising all the time. So what we do, the investor relations team, they focus on only raising and relationship building, and that's why we don't bring them to the asset management. That's why we don't bring them to the deal acquisition. It's a separation. And so our investor relation team, they're raising, if you ask me, 24/7, and they're just fantastic. And yes, we
Yeah.
have deals. We have plenty of deals to raise.
Gotcha. Okay. So then only the investor relations team is raising. So what my question was, yeah, like does the, whenever you guys have a raise, do the like other teams, the asset management team and
Oh,
other
yes.
teams
Oh,
also
thank
come
you.
in and help raise as well?
Yes. So everybody raises in our team all day long, right? But we have
Mm,
primary focuses. So investor relation team primary focus is that. I raise as well. 4 p.m. I have a meeting, and probably it's $1 million check for a deal next year. Sanjay had a bunch of calls. So me, Mike, Sanjay, we also raise all the time. We just put the people and the process so you can back them as you kind of go. And so our primary investor relation primary focus is that. Us, we focus on deal making, team building, and also raise at the same time. And depending on the type of raise, right, we do about 4 different kinds of raising. First one, we reach out directly to the LPs. We're collecting the checks, 50, 100 grand, right? Average check size of $100,000. Second one is the larger check writers, $500,000 to $1 million. We as a partner plays mostly in that category. And then we have institutional conversation, pref, blended pref. I lead most of that conversation, right? And then now we started the broker dealer. So we're going through a process of broker dealers. We have retail, we have large check writers, and we have a broker dealer. And the fourth one is the joint venturing with other capital raisers, right? So we have Maria, Jasmine, and Trevor. They manage most of the relationships there. And then we also come in at the end to make sure that everybody's aligned with the process as we go. And in this here, most of the audience is here, so we do that heavily because we haven't come here by ourselves. We came here as a family, as a team, and we
no
have
kidding.
what 34 different partners last year, no, last 18 months, 20 months since our first one. We made GP, we have 19 GP for the first time with us. It's a lot of capital raisers we work with, we got them. So our thing was to look, you specialize on capital raising, that's a specialty, that's a business to grow alone. Deal hunting, people, underwriting, it's a lot, but how many times you're gonna do it as you find the deal? So let us be the bottom of everything about the deal finding and put the structure. It's like going to a McDonald's, right? Let us be the McDonald's. You know exactly what burger to get. Then you just come in and ask for it, and you kind of go, right?
Love that. Love that. And the the money that you guys raise now, over $40 million, so far, has primarily been from retail investors. Is that correct?
Yes, we have another 20 from a pref Walker Dunlop. That's wouldn't talk about it. These are primarily from retail. Average check size 120 something odd $1,000, a little over
Okay.
300 investors alongside with us.
Right. And then I know you and I talk a little bit, and you're starting to reach out and connect more with family offices and those.
That's
So share with us what are your thought process around that?
going back to that, everybody brings a partner. So before I go to that one, partnership, usually partnership, it's about relationship. But for us, partnership first for your skill set, and then the relationship. If Tim, you have a great skill set for marketing. You do amazing job. I have extremely high regard for you, right? You know it. And if I want to know into marketing, yeah, can I beat Tim? No. Can I play at the same time? Yes, but it's gonna take me years to get there. But if I partner with Tim today, I get it today, right? And same thing, if Tim wants to get a deal and he wants to go, yeah, can Tim find deals like Massive? Absolutely so, but it's gonna take him time to get there. On that note, family office expects a certain type of resume, and then everybody has to go build a bridge and get to know you and prove and you go. That phase for us went away because we partner with the Realty One. So as of now, we work with two family offices already, Mitt Romney's fund and also one of the family offices here in Houston. So that gave us the resume. Now we're
Mm.
taking the resume and going out to the public and say, look, we already work with two family offices. They gave us more than $50 million last 2 years. Now it's time for you to come on, give us some money as well. So that's the one we're going with. Rather, I'm the first one raising for the first time. You know? So that's why, yes. So we're reaching out to family offices, New York, Florida, and California. We are hovering around quite a bit of there to kind of get into that workflow right now.
It always blows me away how strategic you guys are. If you can start all over again, is there anything that you would have like you would do differently? Any yeah, like would you go all in on the capital raising side? Would you still be deal operators like you guys are doing right now? Like anything that you would change?
As of now, I would not change it, and because we have got the most out of it, and as the market is turning faster than we are turning,
Yep.
that giving us a lot of ways of that identifying a lot of gaps in our business, and that is optimizing down the way. So I would have done it. So for me, coming in, living shelf, coming off to real estate full time, if I were to come into syndication, again, I would build the team first, no matter what. Team comes first, then the money or the deal, whatever comes about. Now, if
Right.
I want to be really true to myself, I would build the team to focus on equity raising, because sometimes we forget money is in the money, but the money has to be meaningful size of money, right? So I would get the backing from the institution coming in and create that arm as you kind of go. So that's what I would say.
Right. Yeah, that's amazing. You guys have continued to do deals. I don't think you have stopped. Like you have not stopped a beat. While a lot of people have slowed down their buying or pivot in some way. Share with us what's your insight looking forward. Why are you not afraid of getting into deals now when a lot of people are? Why are you not waiting out for the for the good deals that are to be coming online, the distress deal, the rescue deals? Yeah, so give us some insights into how you think around the market and your thought process on, hey, we're gonna buy deals no matter what what the market's doing.
So our belief is that every cycle has good deals to make, good deals. It's just not the way we do the deals. What we did in up cycle must not be same as down cycle, or the way we do the deal in down cycle must not be an up cycle, right? So that's the mindset that we have, as you know. And the second thing is that what we call it massive, first and foremost, it's a finance company. As a
Mm,
finance organization, we got to have a little bit more macro view. Right or wrong, we should be able to back up our investment hypothesis, right? So I'll give you a go back. When we bought the Pasadena, we bought at a 3.94 with a rate cap at 6. We thought we know the market, right? Our rate cap was 6, will hit up a year and a half down the way. But guess what? I didn't even collect my first month of revenues. Rate cap 6 hit, kind of showed up, right? Right away, we took a hard position that we're gonna buy assets, or we're gonna buy assets not on pro forma. All of a sudden, we're outside the game completely. We go from a 16, $20 million deals to small 3, 4, $5 million deals. A lot of folks, they joked around with us, why are you buying a $5 million deal and you got 20 people in your team, right? But they didn't realize that if I buy in a smaller deal, it's a full recourse. I get it, but I got 10 years fixed. I got 5 years fixed. I'm not worried about that at all. So all of a sudden, we ended up doing over 4 deals, all are average size $5 million. Those are
mm,
recourse loan. We have done it. But then those are 8 years fixed, 10 years fixed, 3.5% to 7%. I'm not worried about that market at all. That's how we did deal. And then when the rate kind of caught up, and our philosophy was that look, rates gonna be higher for longer. We took that position a year and a half ago. and it's gonna be hover around the rate that we have, but market quite doesn't know yet, right? So if rate is already high and it's going to be high for longer, we should leverage up as much as we can, because how bad is going to go from here? Not a whole lot. It's upside, right? So that's how we bought the McCollum deal. We levered up almost 82%. Made a lot of sense, but McCollum structure, it's a very bad structure a year and a half ago, because you don't lever it up when the market is high. Like, what we call it from the house flipping side, most of you guys do it. You don't buy stuff from the MLS when the market is hard to flip. If the market turns, you're upside down, right? So you don't leverage up too much. So McCollum was our last year, November, we closed that. It was a $60 million deal. That's our triggering point, levering up. And now we're extremely bullish on a high interest rate deals. Anything, if I could pay 50% interest rate and the deal floats, I'm a happy guy, right? Let's go do the deal. So we are bullish. Our investment hypothesis, decision hierarchy is go with that floating debt. Then I would say your bank. Third one is your agency, and don't touch any loan assumption. We don't underwrite anything that doesn't have 5% interest rate right now. But that's the silver lining, right? You got to put some finance, long-term view, and then come up with the investment hypothesis. Then look at the world that way. And that's how we are looking at everything from the finance angle. Where is the debt? Where is the equity? And when you put together, whatever property shows up, we'll buy it. So we're not looking for asset. We're not looking for the typical strategy that I must buy a 70 to 150 on a Class C with ABC zip code and XYZ city on a Monday. We're not. We're saying this is my finance, this is my equity, this is the expected rate of return. Those are the 6 markets. Look at it, whatever shows up.
Right. That's amazing. And then also too, like you guys have gone way beyond multifamily. So share with us what's your mindset there. What had you guys decide to diversify beyond multifamily? And we were even talking about an office building, right? Shahriar was sharing with me about an office building they were looking to buy, and I got us connected and had lunch with another a gentleman here in the Houston market that was big into office. I was like, wow, this is the only guy that I've met that is bullish on on office space right now because of how he runs his business. But I'd love to hear from you, Shahriar. Like, what had you guys decided to expand beyond multifamily?
So we just framed our 2024 business plan. So with the 2024 business plan, we are, again, on paper, we're saying we're going to go buy $250 million worth of assets, new assets. About 150 will deploy to the multifamily, another 100 will be new construction. And then we have some allocated bucket for land, as you can go through. And for us, everything is interdependent, right? Example, there was a 10 acres came about in Houston. Even though I buy land, I don't buy land that expensive, right? But we have the R1 team. We can do industrial space. All of a sudden, that made sense to go after the land. I knew the price was okay for the land, but I didn't pull the trigger because I was me. But then R1 team perspective, the deal checks out. Now there's a future plan for it. Let's go get it, right? And that all of a sudden, we use the skill set that we have. Now we've created a value chain, right? And then you kind of go. And then equity pressure is too much right now. For me to raise $5 million to buy a $20 million deal is not possible. And if I have to buy a piece of land to make the return that you have, I have to give them 50% of the market values, right? Or whatever the price is. Now, if you flip it, if the landowner comes in with the land as a JV, my equity pressure goes down.
Yeah.
And that becomes a JV partner. And we get to deploy our skill set, which is we own the construction company. We own 2 construction company. One does retail strip center builds up to 2-story, maybe 3-story. We just acquired a home builder. So that's our skill set. So we do us, land sitting out there, not doing anything, taking a hit on the price. But if we can add the value, we can push that forward. So that's why we're looking at the whole value chain from the land to new construction to the home building and then also multifamily. So that's what we're looking at for next year.
Wow, that's amazing. It just like, yeah. Whenever I talk to you, you're so smart. Whenever I talk to you, like my mind just get like stretched way beyond my comfort zone. I love it. I love it. All right, so let's talk about marketing and social media marketing. You guys because you do have a big team, you guys have a really strong presence everywhere. And also too, along with marketing, and then one of the things that you guys do that I like a lot is that every time you guys go to an event, you would plan for a meetup, and feed people food, right? You plan it at a restaurant somewhere where people can go and meet up and have some food and connect with people. So share with us some of the marketing strategies that you guys use to attract both active partners as well as passive investors.
Everything that we do, the framework is relationship, and framework is identifying really good set of people and find a way to partner with them and add value in their life, whatever that we can do. Because once you do one or two and three, it becomes a better relationship, right? So we look at that mindset. And then the second thing we said, look, if someone is going, taking their time out of the ways and going to conferences 2 days to 3 days to 4 days, if you could take a little bit more off the conference setting, because you really want to get to know somebody, you see them at their pajamas, right? At 3 o'clock in the morning, at 8 a.m. in the morning, at 3 a.m. in the morning, then you get to really know them, right? So we try to get to know people, and also us, they get to know us in a little bit more tighter setting. So those events are meaningful to us, and they come in, we hang out, we break breads, and we just chit chat a little bit. So that's what, wherever that we go, I think is we're spending our time and energy to go, and you guys are doing as well. And as a primer to that, if you can come hang out and shake hands and share ideas. And so that's what the intent of it. And that's how we started in the last 2 years or so. So everywhere we go, we try to say, hey, you know what? Team is always hosting an event. If if you have seen enough, like his beautiful face, if you want to take a 10 minutes break, come hang with us a little bit. And then so we like that. It really worked out. We met lots of great set of people. We work together now. So that's a very powerful thing for us. Yeah.
That's awesome. Yeah, I love the way that you guys do that. And then in terms of your social media marketing, do you have like one person on the team that sort of create the plans and then have everyone else on the team kind of execute that plan, or does everyone do their own social media independently, or how does that work?
From the early on, Massive took a stand is that we want to build a company. We don't want to be a syndicating team. We don't want to be a team who owns $1 billion of asset. It's a one man or two man or one party or two party shows, right? If they stop, bus stop. So we took that position early on. So as we brought in the team, we said, look, yes, everybody can build their own brand, but if you can build a company, and then we also becoming a brand within it, right? And that painful upfront, but we'll pay a lot more dividend down the way, because you can give your team a lot of work, right? And we're consolidating the work, and that's how we started. And it was a lot of rub. Don't get me wrong, it is tough when you think you were good and you let that you go, become a part of a team, and you're growing the team for the time being. So on that note, I respect all of my team members, all of our team members who have done it, right? So for us, everything is at the team. We want to build a massive. So if Trevor wants to take a vacation, Jasmine can back it. When I go out, Sanjay can back me up. And when Mike goes out, he's out for 2 weeks, we're here to back him up. So all of the marketing happens on the back end. And early on, again, we knew we cannot be everything, cannot do everything. So we brought in a team. So the design of what would that happen, it comes from most of the thing came from me. Most of the time on the marketing side, I'll explain how we came about. Then we reach out to all of our team members. Like Trevor has his own view of the world, Jasmine does ours. Then we kind of mix and match it up together, come up with the plan for the yearly plan. We have a marketing manager that all of us we support. Underneath her, we have two other employees that supports her. Underneath her, we have a whole agency that works. The marketing is a beast by itself as you do it.
Right.
So I think Trevor can show a little bit today. How many webinars we have done this year, Trevor? You could say, okay.
Yeah, well, 42 so far.
Only.
Yeah.
So yeah, it's a big marketing. For us, what we have done is, think about it, on my residential side. Don't hate me for this one. Last year, we sent about a little over a million texts. We called about a little more than 700,000 numbers. We sent about a 250,000 mailers. So we kind of sort of know what that mass looks like. So when we brought into the massive, we had a view of it. And then we asked the question, look, you want to be a brand? What does it look like?
Right.
And yes, look, personal brand is great. But if you look at right now, most of the personal brands are tough because once you stop, brand stops.
Yep.
We don't want that to happen, right? That's why team was important for us. And we have a big marketing team. They're just fantastic.
Yeah, yeah, and you know, one of the things that you talked about, and just like whenever we talk, you're like, I want to be the billionaire that no one knows about, kind of. I know you didn't. That wasn't your exact word, but yeah, it's like the guy behind this, the what is it called, the magician behind the scene, or the like just pulling the strings, right? The puppet master just pulling the strings, kind of thing. But what's your mindset behind that? Like, why don't you want to be the Grant Cardone of the world? Being the guys out in the front. Why do you want? What's your mindset behind wanting to be the guy behind the scene? Making all this stuff happens and having someone else be the front person.
Oh, that's a deep question. So I'll give you this. When we talk about the shadow universe or shadow team, shadow, whatever you want to call it, to me, that's McKinsey. They are the puppet master of whatever that you see. When Biden goes down, when Trump goes down, what do they call? They call McKinsey. When Shell goes down, they call McKinsey. When, even though you go Saudi, right, the whole MBS 2030, who he called McKinsey. So McKinsey to me is my example. They're the puppet master, less than 10,000 people. They're running the world, right?
Wow.
And second thing is, to win, you need very selective, powerful, really good team, right? And then everything else comes with it. So for me, it's when I took when I put together, it's look, team first, and after the team, look, I'm here. I have a shelf life. Underneath, we have our team, and if I don't plan for the shelf life today, if we don't have the team underneath us who can grow up and fire me one day, then I'm not doing, and I'm going back to same working for myself, right? So when I put together, I said, look, if that is the case, and we're building a second generation of leadership, then what's the point me saying everything about me all the time? So that's why we push our team first. And we believe, we strongly believe Trevor, Jasmine, Maria, Brenda, and everybody else in our team, they're the second generation of leadership and they can outlast us. So why not building them now than later? Right?
That's amazing.
I'm not sure I'll outlast you. I'm a little older than you.
Trevor,
I'm the old guy
hey,
in
you
the
never know,
company.
man.
Yeah.
I got the
We're gonna
energy
go
of
out
a
there and
young
having
guy.
fun.
Yes, kind of like Warren Buffett and Charlie Munger, right? Charlie's gonna take over Berkshire. It's like, dude, you need a much younger person to take over. All right.
And the
Well,
truth is, Tim, it's a multifamily, the growing in the apartment. Yes, it's sound and cool and fun, but it's a lot of work. And if I and a strategy 101, we can never be everything to everybody. We must be something special to somebody. So it's a lot of work. And yeah, if you do one deal, two deals in a year, you can do it all. But if you do 10, you can't. If you do 20, you can. If you do 10 at a millions of scale, we got to deliver those projects. It needs a skill set. It needs a certain type of demeanor, a certain kind of know-how. And the School of Hard Knocks will get you a certain amount. Education will get you another account, right? So it's a blended in. So when we put together, it was easier for us to build Mike, build investor relations, come out, and us over time we come, right? Look, I wasn't in the light for last year and a half. Now we're coming together because things are warming up a little bit. And behind me, you'll see Sanjay also coming in, but he shows up all the bank meetings. Everybody knows him in the banking organization than me and Mike, right? So we are present depending on who's doing what, right?
I see. That's okay. Let's wrap it up around that. So, leave us a word of wisdom when around team, around partnerships, because we all know like teams and partnerships is how we're all going to grow and scale our business. So share with us some insights or some word of wisdom around that before we wrap up this segment of our show today.
Cut your losses as fast as you can. That's rule number one. If the partnership doesn't work, it's not gonna work. Cut it, move on. That's number one. It's harsh, it's time, but you respect the other party. Don't drag it, right? Respect it, shake hands, be honorable, and get out on the partnership if you want to stay long. Number two, build the partnership on skill set. In my mind, school works. If I'm a freshman hanging up with a bunch of freshmen and trying to figure out what the best way to get a graduation, tough luck. So in your team, you need to have freshmen, some sophomores, some graduates, some PhDs, some company owners who almost retired. So if you put together, you get the best flow of information. Multifamily is just like that. So you need someone who's just like you, based on where you at, somebody 5 times bigger than you, somebody been there a long time and they're tired of it. They'll give you that one-liner and tell you exactly what to do, right? Build the team with the wisdom and the know-how and the time. That's what I would say. So cut your losses, skill set first, relationship second. Third one is when you build a team, look at the horizon of the growth. Then you build your team as you go.
That's amazing. Yeah, and I'll add another one that you had mentioned before, but I'll remind everyone now about letting go of your ego. Right? It's like, that's a big one.
Yeah. I mean, this is the beauty of real estate. So I'll leave you with the story. Just give me 30 seconds, right? My biggest learning moment, one of my biggest learning moment in life. I graduated undergrad with the 4.0, got with the Shell, went to Rice, got to the top of the class. Then I go to real estate events. And I'm like, my head is like this big, a typical guy, right? So I go in, there was, I think, Lifestyle Unlimited that put a show out there, and we go. It was kind of cool, single family, and I was taking notes. I was asking questions, right? And there was one gentleman, he's elderly, I think he's 73 back then. It was 20 years ago. No, about 2013, 2014. I was asking all those sharp questions. Then during the break time, he said, son, let me, we got into talking. He literally called me son. And he said, son, let me give you a thing. So look, it doesn't matter how much you know. It matters how many good people you know. Right. Then we got into the thing, and he said he owns 72 homes at that point in time. Looking at him, you would not give a dime. Looking at it, 72 houses, all free and clear in Heights and Garden Oaks area, right?
Wow.
Some in Sunnyside, and he was a plumber. I can't. That was a humiliating moment to me. It was like, wow, this is what real estate can do. So from that point on, take your ego somewhere else, man. It is something else. So that's what I would say. That was to me a very humbling moment. That hey, it doesn't matter where we come from. It doesn't matter what we have in our pocket. If you have a good heart and a good intention, you'll get wherever you need to get to.
Love that. That's really good. All right, Shahriar. For those that wants to connect with you, learn from you, partner with you, how should they reach out to you?
Massive.capital. Every Wednesday we hang out at 6 p.m. CST. All of our investor relations out there, come check us out.
All right, massive.capital. Okay. And yeah, awesome. Shahriar, thank you so much for being on this interview with me today. Really appreciate you. I've learned a ton. I learned a ton every time I talk to you. You stretch my mind.
I learn every time I talk to you, man. Every time I talk to Tim, I was like, gosh, Shahriar, you are making an F-. You better go out and do your work right.
Yeah, right. Yeah, but yeah, we definitely have very high mutual respect for each other, and I always love you. And so thank you so much for being on our show today. And yeah, really an honor to interview you today.
Tim, thank you. I mean, the stuff that you do for your team, for your community that you're building, it's fantastic. We think, and just because we can go to Instagram, put a nice video, we can get, investors. That's wrong. That's like a dead wrong. Take that out from your book, at least in a mindset, unless you go a structured way going about it, building a long-lasting relationship with the right resume, money's not going to come. And what you do for your community, how you go about strategizing, how you finding the deals and all those things, that is fantastic. I'm yet to see someone who's going about it with the heart that you're going about it, and very tactfully so. Right? So thank you for everything that you do. Very good.
Thank you. Awesome.